Hi, and welcome to my strategy series. In these videos, we look at quick ways to analyze the markets. In this video, we're going to be looking at trends. First and foremost, the most important thing about trends is marking them out properly. In day trading, we only ever use accumulation to accumulation from the highest time frame working down on the top side of a chart. So what that means is like this, accumulation to accumulation on the top side, which is for me, beige, and maybe for you guys at home, guys and gals, it would be green. And on the bottom side, blue to blue or distribution to distribution. Again, at home, this is probably going to be red if your default colors, or if you're like me and you like to change it, you'll have a different color schema. Important thing is that it is from distribution to distribution on the bottom side, accumulation to accumulation on the top side without any falter. And you always work from time frame down, as everything in day trading and charting is a decycling theory. It always recycles and decycles itself down to smaller points of break. So what we would do here is you mark your candles, and you can now be in this trade, or you can be looking at the chart, and you can move down in timeframes to see, hey, is there anything here on the 1 hour? And before we move down, we're going to go up, and we're just going to immediately say that there is nothing to use on a daily chart here. We don't have enough data yet to even justify using these points. The beginning of this would be a 4-hour chart. So that is where we can mark 4-hour to 4-hour top and bottom side. Now, if you are to go into your charts and start marking and trying to adjust these trends, what you have to do is you have to work first off down in time frames, and second off, you have to hard close your trend on the next time frame before you move on. So what that means, a hard close is when the bottom side of any given candle closes below a level or a trend. So in a distribution case, the bottom side of that candle would be the top of the body. Now, the reason that is how it is because when you're distributing, you're moving down, making the bottom side of a downward movement the top of the distribution candle. When you are moving up in the markets, the top side would be the top of the adjacent candle. So you would be breaking over the bottom of an accumulation candle here, or the top of a distribution candle here. So that is how you hard close something. So if you were to go back to your 4-hour chart, you could simply look at this and you would see this is still moving up because, hey, it doesn't have the bottom side of a blue candle closing under it yet. Actually, if you zoom in here, you're just halfway through a blue candle. So actually the first one that does is right here. And notice how Bitcoin instantly moves down right after it closes that bottom side of a candle. So accuracy with trends is a must because we can draw them anywhere unless we have the right trend. I call these active trends for butterfly effect too. Unless we have active trends, we understand what an active moment in the charts are. We don't have the right information going forward. Now, what I could do in this move is weaken this trend and say, hey, we're getting ready to break further and further by going down into time frames. And what I would do is I would say, here's the reach point. Never adjust the base point. The base points always stay on the highest time frame available. You never adjust your base point. If you've adjusted it, go back up into your time frame. So if I've adjusted this to some point like this, stop right there, go back up into your time frame, resnap it. Even if it looks correct, it's not. Drag it off, resnap it with the magnet tool on, and resnap it back to that candle. So now we're going to go down in time frames to the hourly, and we're going to hard close the next candle. So you can see right here, it tried to break that 4-hour level by hard closing this. So we could in fact get a little bit more accuracy by adjusting this candle to here. And aha, all of a sudden, if you zoom in here, it didn't quite break that 4-hour level. The 1-hour level held slightly above this part of the trend. And yes, that makes a difference. If you're going to ask, does that little tiny piece really make a difference? Absolutely. It's what dictates and defines everything in the markets is these exact rules. So, but what does happen is it breaks down here. So now you can move this to here and say, hey, we have a 1-hour trend and let's see how that gets respected. Aha, it breaks that again, trying to break this 4-hour, going back up into time frame. And it doesn't manage to break its move, right? So you can now go and see if you adjust this to the next hard close. Oh, let's Control Z back, make sure we have the right one. It is this one indeed. This should be what controls the move and breaks the cycle of the entire trade down. And as you can see, it does. If you were to snap it to the next hard close, you would be at this blue one right here. And you can see the breakdown off of that trend happen once you lose that trend. So this is how we work with trends. We always decycle timeframes and decycle information and move forward in time. We can never go back in time and say, oh, here's a time frame here because of reason X. We can never we can never go backwards in time. We always have to be moving forwards to the theory of decycling and the reduction of elements in trades and charts. It's what makes the chart spin and it's what makes all the magic happen. The theory of recycling and decycling, time frames compressing down into moments of conjunction, and the same thing with the verticality of a chart. You can only move forward in these moments and never backwards. You can't travel back in time, so how could you mark charts backwards as well? They didn't exist. They weren't active moments in the trades. So a good strategy for using trends, first and foremost, okay, number one thing, accuracy. You have to mark these properly. Just immediately looking at this chart and going back to my lesson on hold levels, if I had seen this and it was trying to, let's rewind this trend back at the exact point. If I had seen that this trend just got attacked like this, I would say, hey, we're trying to break a 1 hour trend. Where's a 1 hour hold level? And then I would start going down into my hold levels and be looking for points that could break this move. This had already gotten hit, I believe. You could go down in time frames. You could say, here's a 15-minute. Aha, that already got hit. Go to your next 15-minute, which is here. Remember, this can accompany anything from this part of the chart to this. This had gotten hit already. Okay, let's go to the next part, which is right here, this 15-minute. Hey, this one's not hit, but could we dive deeper into this 15-minute chart to see, maybe there's a smarter part of this 15-minute level where we just get maybe a little bit greedier. Well, if the 15-minute starts here and I dive down into this chart here, I can say, hey, there's no test on this 5-minute level. What about a 3-minute? This 3-minute's relatively untested as well. What about a 1-minute? Well, you could even go as far as saying, here's a 1-minute untested level. Well, okay, let's see if we were right or if we were wrong on this. Hit the auto button. Oh, get us back up in the charts. Let's move up in time frame. And let's see. There's that 1-minute level. Here's our original 15-minute level. We can take that 15-minute hold level off. Find the 1-minute level. That will be what holds the move down. If we know we're going to be breaking this move down based on these hourly trends, because we're saying an hourly level can attack the hourly trends, this one was already tested in the interior part of the chart. You have the 15-minute level here, gets hit, go down in time frames, find the hold level inside the 15-minute. Both are tested in one fell swoop and bang, this is what could hold the move down. If you had missed this part of it, you could simply just go to the next hourly hold level and you'd be right here and you could see that got tested, and you probably can do the same trail and find those levels inside of there. And then you can go to the next hourly hold level and you can buy it there. So here's what you never want to do. You never want to buy a trend that's breaking like this. You never want this moment to happen and your price is down here like this. Let's use the replayer tool. This is the easiest way to do it, actually. You never want to be going towards a trend and trying to buy a trend breakout. This is a cardinal sin in trading. It's the same thing that happens here. And unless you know that you're going to break that trend for other parts of your chart that are telling you, hey, we're breaking this trend, don't buy trend breakouts. They are a recipe for disaster because this is what will happen to you. You will try to buy a trend breakout. It looks like it's going to be breaking the level. You feel good because you're up a small amount of money or a small percentage. Or if you're like me, a 100x trader, you're up a decent amount of money. And then all of a sudden the trend rejects and it just rips the other way completely. This is because you should never be buying trend. Alternatively, you should be buying those moments that are controlling the trend. These moments up here like this, right? Where you have that 15-minute that I believe was reduced to around here. As we look through the charts, oh no, sorry, it was a little higher. It was somewhere in here. It doesn't matter. We found where the level is. We can just pin it for here, just for ease of mind. We found where the level is, and that's what could hold this chart to break that hourly level. So whenever you're taking trades and you're looking at trends, look for the hold levels that can break that trend. And a good indication is when you go and you have a trend that starts, like in this case, you had a 4-hour trend. It got diminished down to an hourly trend. And I believe it even works itself down to a 15-minute trend. If you go through these closes of this trend, I believe that once you get to the hourly, you can actually hard close it to, I believe if I remember correctly, going through this move, it was right here. So I believe if you hard close this thing properly, you can even get down to a 15-minute, telling you that on the other side, a 15-minute level is what's going to hold it down. That's going to break the move. Because you're simply using the same time frame that the trend exists to break the move. So that way you're going to have your buy spot, your perfect buy spot to attempt to break that trend happen off of the hold level that's holding it down. So you can just hit play here. Let that chart develop a bit. You go to your 15-minute level and you can just find the 15-minute level that will break it down, which is right here, which this is the level that held. And again, you do that same process of just going through this and you can say, hey, here's a 5-minute level. And inside that 5-minute level, I'm sure there's a 3-minute level and a 1-minute level. And so goes the story of hold levels within day trading and how they attack and break trends. Aha, easy, have it right here, the 3-minute level. Perfect entry, no risk. And oops, sorry, we need to go a little bit down more. Perfect entry, no risk. You can see how this had held the entirety of the move down. And voila, you can play a trend break by identifying what can actually break the trend time frame wise. And then by identifying that same component on the other side of the chart to use hold levels to buy a trend break so that you can place your buys up in this range. And you can kind of just sit here and let this thing ride down and break. Or if it starts to break up on this side, you can get out of your trade and profit still. And you've taken no risk because you understand how to use trends properly. and you've understood how to use them smartly by hard closing them from the highest time frame down, walking through all of these interior points. We can do it again real quick, walking through all of these interior points to get to a 15-minute moment right here, which was here, which hard closes this guy right here, which then if you went to a 15-minute, that's that same 15-minute level. So that's how you play trends. This is the right way to use trends. We look for trends to show us their strength by saying, I am developed on this time frame, therefore on the other side of the chart, that's what time frame can hold me down. I can look for that level, I can buy that level, and if it holds, guess what? You're probably breaking the trend underneath, therefore granting you a great trend trade. See you on the next one.